Hello, welcome to Financial Solutions. I'm your host, Mark Rigney. Today we're going to focus on the benefits of selling a life insurance policy, also known as a life settlement. For those of you over the age of 65 or terminally ill, you can sell your life insurance policy to an investor for the amount exceeding the policy's cash value. There are many situations where selling a life insurance policy can be advantageous. The most obvious is when an owner is lapsing or surrendering a policy for its cash value. The sale of a life insurance policy can create liquidity from an otherwise dormant asset. You could receive more than its surrendered cash value as an alternative to surrendering the policy to your insurance company. In our studio today, we have a licensed life settlement broker, Ray Towles. Ray is going to discuss with us the benefits and who qualifies for this type of transaction. Hi, Ray, and thanks for being here today. We're excited to have you.
Thank you for having me.
Ray, why don't you tell us a little bit about the history of life settlements?
Well, life settlements is relatively new to the secondary market, but has been forthcoming for about 100 years. It dates back to a Supreme Court case, Grigsby versus Russell.
Wow, it's been around that long.
Well, in 1911, it was where they first established the policy owner's rights to basically change ownership, transfer ownership, set beneficiaries, right to borrow against it, in much the same way you would in
life insurance policy,
Life insurance policy would set it on the same legal footing as stocks or bonds or other types of normal financial instruments.
Really? I did not know it was around for that long a time. So this is not a new thing.
Well, no. The idea that dates back to the actual transfer and ownership issues that would have arisen out of policy ownership to that case of 1911. The actual secondary market, where people were buying and selling life insurance, is relatively new to the U.S. at least anyway, probably in the last 10 to 15 years.
Why don't you explain to our viewers what an actual life settlement is? What is a life settlement?
A life settlement, by definition, is a contract to sell an insurance policy to a third party for a value greater than its cash surrender value, but less than its face value.
Why wouldn't someone want to do that then? I mean, if they're going to get less than their surrendered cash value, face value, why wouldn't they want to sell their life insurance policy?
Would absolutely agree. That would seem a silly question, but I think the statistic is about 85% of the people that could use our service don't know we exist.
Is that right? Do you have problems convincing potential sellers of their policy that you can actually make money from a policy that you have to pay a monthly bill on?
That's correct. Most people see it as just that monthly bill and don't feel or recognize that there's any value to that policy other than the fact that they're going to get a face benefit at their face value at the end of the policy after making all those payments.
You deal with a lot of skepticism?
Quite a bit, certainly.
Okay. Ray, why don't you share with our viewers what the difference is between a life settlement and a viatical settlement?
Well, a viatical settlement by definition is for someone that's terminally ill, 24 months or less to live, or someone that's chronically ill, whereby they have difficulty with two or more of, or at least meeting two of the daily activities of life, like dressing and bathing and eating.
Okay. And a life settlement differs from that how?
Is life and settlements is going to encompass basically everything short of that. Anybody traditionally on their life expectancy reports is how they're sold versus an imminent thought of death.
Why would someone want to sell? Go into a little more detail as to why someone would want to sell their life insurance policy, either as a life settlement or a viatical. Why would they want to do that?
Well, they already do it now by surrendering that policy back to the insurance company for its surrender value, and or just letting it lapse for non-payment.
Are you saying they can get more money from selling it rather than surrendering it?
Well, that's the definition for a life settlement. Is it's got to the life settlement to take place. It's got to offer someone more than its surrender value. So if you're going to be a candidate for a life settlement, then yes, we're going to offer you more than its surrender value. As it's
this may be an off-the-cuff question, but is there a particular percentage more than surrendering? Is like 10% more, 20% more? Do you know, or is it dependent upon a case-by-case basis?
Absolutely depends case by case, because you have to pull someone's medical history, medical records, and get a life expectancy report done to guesstimate someone's life expectancy, multiply that by the yearly cost to figure out what the cost of the policy is going to be, and then depending on the rate of return that the investors are looking for as to what they're going to offer for it. So it's quite a complicated process.
Okay. Now, you are a licensed life settlement broker.
Absolutely.
Okay. Do you represent the current policy owner or the investor?
Always the policy owner. We are licensed and state regulated to work in behalf and for the policy owner specifically, and in much the same way that you might use an agent to sell a piece of real estate.
A real estate agent.
Right. We represent the policy owners.
So it's in your best interest to get as much money for the policy owner as you possibly can.
Absolutely.
Okay, okay. What are the different types of life insurance policies that can be sold, either as a viatical or a life settlement?
We'll assume, for the sake of argument, that all policies can be sold, where you'll see less interest or less likelihood of having them have a greater value than their surrender value is where you might have a whole life policy that builds cash value. It's going to have a larger surrender value because it's built up cash. Traditionally, policies that price well are the universal policies, and policies that don't build a lot of cash value. Simply buying the contract or the instrument itself to make a certain monthly payment to get a certain death benefit.
So you can sell a whole life term. Can you sell a term policy?
Any policy is essentially
any policy. Okay. How does a policy owner find out if this is the right situation for them?
They would want to log on to whatisalifesettlement.org or whatisavitacolsettlement.org, give the basic information, give them basic information about the process, and if indeed they have a policy they might be considering the lapse or the surrendering of, certainly consider a life settlement. It doesn't take a lot of work to figure out whether this is a possible life settlement or not.
Some senior citizens may not be acclimated to the internet. Do you deal with their adult children?
Absolutely. That's probably more likely than not who we end up talking to.
Is that right? So you deal with a lot more with adult children than the senior citizens?
I'll say it's a good mix, but a lot of times they're dealing with those affairs at the point when they're entering, caregiving facilities and so on. That it's one of the bills that get dropped out quite quickly. We're on the first round of cuts as far as bills go. This is one that usually takes the axe, and it's silly to let that go when in fact you can derive more money out of a life settlement than simply what you're going to get by surrendering it.
Their adult children may not know that this bill can actually be turned into cash value.
It catches them off guard all the time.
It doesn't really, okay. If a policyholder decides to sell their policy, who decides how much the amount of the settlement offer and how is it calculated?
Well, certainly the process decides. As soon as you make an application for a life settlement, we then go about collecting the medical records, getting life expectancy reports done, enforce illustrations to determine cost. The things that can affect it widely are the insurance company involved, the type of policy, the yearly cost of that policy, and the life expectancy of the insured are the main points of focus on trying to determine its value.
Say you come across a legitimate candidate. How long does that process take, generally speaking, from point A when they make the phone call until they get a check in the mail? And do they get the checks in the mail, or how do they receive funds?
They can receive funds through a wire transfer, check. It's kind of open, certainly, to the discretion. As far as time frames on actually,
how long does the process take?
Beginning to end, going to say 60 to 90 days. Some lasting more than 6 months. The big lead time in there is how quickly we can get back medical records from someone and get a life expectancy done.
Now, some of the adult children may be worried about, not receiving those funds. Can the funds be put into a trust account for the heirs?
Certainly, you can take their cash out payment and do whatever they like with it, as long as it's not illegal.
Right, right. So it may be more advantageous to sell the life insurance policy rather than surrendering it, because they can get more money out of it.
Certainly should consider a life insurance policy for life settlement versus just surrendering it. Why go blindly into a choice that may not be the best one for you?
Does the recipient or the policy owner have to worry about negotiating the process? Who does that?
No, absolutely not. That's what we do. We start with collecting the information for the policy owner, collect the medical records, the life expectancy reports, get those out to all the state licensed buyers or providers, as they're called, and then through the process we'll get every policy owner that submits under this a declination for the policy or an offer to buy the policy from every state licensed provider or buyer, as they're called. That assures they get the highest price.
So it's almost like a turnkey situation where they make the phone call and you pick up the ball and run with it from there.
That's absolutely correct.
Okay. Is it important for the broker to be licensed yourself? Is it important that they speak with a licensed broker?
Absolutely, as well as the buyer that they're going to end up selling to, because you want to make sure that because it is a state regulated activity these days. It has come a long way in the last 10 to 15 years since its infancy, since it's kind of come onto the scene. Now all states regulate it. The the providers, or the buyers as they're known, will certainly want to only deal with a licensed broker, because they can obviously get in trouble for not using a licensed agent.
Is that right?
That is correct.
Are there any tax implications for receiving these funds by surrendering a policy?
While we can't offer specific tax advice,
You better call your tax accountant
we
for that.
suggest always that they call their tax advisor for that information. But we'll suggest too then that typically anything paid in excess of the amount of money paid into a policy over the time is typically carried as taxed as a capital gains.
Okay. Does the policy have to be enforced for any minimum time span? Is there any requirements for that?
Yes, always needs to be out of contestability. There always needs to be that 24-month period where an insurance company can void the contract for misrepresentation or something they find in the policy inconsistent, and therefore in that first 24-month period they can simply cancel the policy and return all paid premiums. After that 24-month period, the contestability is over. The only way a life insurance policy won't pay out is for lack of payment.
So they have to have the policy for 2 years to get away with all that.
For contestability.
For contestability.
If that's their time frame for contestability, 2 years is that number then.
Where can a potential candidate go to get more information? Do you have a website?
Again, yeah, www.age60.com, ATAGE60, or the informational site, generic to all, whatisalifesettlement.org.
Okay. What percentage of the policies ever pay a death benefit?
According to Milliman and Robertson, insurance industry consultants suggest that universal policies only pay out 12% of the time.
12% of the time.
Only 12% of universal policies actually pay a death
So
benefit.
doesn't it make sense then to sell the policy or do a life settlement as opposed to getting paid a death benefit?
Certainly, if indeed that party's looking at surrendering or canceling or lapsing that policy, this is an option. We're not saying it's right for all, and certainly there are cases where this is not something to consider. But if a party's going to consider lapsing or surrendering a policy, you certainly should at least look into the possibility of a life settlement, because by definition, if we can't offer you more than the surrender value, then you're better off with the surrender. But if we can certainly give you more than that, then you're going to make more money than just simply surrendering it.
Are there any age restrictions, any age requirements?
Typically the marketplace wants to see someone 70 to 75 years of age as a minimum, and that's for healthy seniors. But of course, if you're a viatical candidate, then there's terminally ill or chronically ill, then there's no minimum age for that.
Okay. Can a life settlement be effective for an owner retiring from a company for a corporate policy?
Sure, if the party retiring is able to take that policy with them and becomes their property, and their policy has value greater than its surrender value, then certainly they may want to seek a life settlement.
What about if a company faces bankruptcy?
Well, if they're indeed the owner of the policy, certainly they have the same right. Whoever the policy owner is has these rights to a life settlement. So if a company owns that policy on an individual, then certainly they can sell that policy.
I imagine the insurer probably would not like them to utilize a life settlement. Does the insured have the right legally to dispose of the life insurance policy any way he or she sees fit?
Well, the insured has the right not to sign a HIPAA form, which would not release their medical records and would make it impossible for someone to value out a policy.
A HIPAA form?
The health insurance form to allow someone to release medical information. Then without that ability to collect someone's medical information, you couldn't do a life expectancy report, therefore couldn't determine ultimately how long someone has to live, and therefore the policy wouldn't be sellable. So the insured has to be involved in the process or you wouldn't get it sold.
After the recipient sells a policy, who's responsible to pay the premiums from that point forward?
From that point forward, it's definitely the new owner. The current policy owner and beneficiary change. If that was the party at hand now, will certainly not be those parties in the future. The new owner takes over ownership. They certainly set in their own beneficiary, and the current policy has no benefit to the old owners and the old beneficiary at all once they're paid out.
How confidential is the process?
It's of course it's the utmost. That's why you have to have the forms all signed as far as medical release